Hello everybody, welcome once again to my channel Krishna Singh Deo. I'm pretty excited today because this is our first long video for this year for class 11. Till now we have understood what is basic accounting terminology and we have completed a larger part of gap as well. In today's class we are going to start our chapter of accounting equation. For ISC students, accounting equation is only theoretically asked, and for CBSE students accounting equation is there in detail, means they have to do all the practical questions also. Both the board's requirement will be taken care in these classes. So stay connected and let's get started for our first long video. So we are starting with accounting equation today. What is accounting equation? We have studied under gap what is dual aspect concept. Accounting equation is nothing but the numerical expression of dual aspect only, where we say assets are equal to capital and liabilities. You all are familiar with these three terms: what is capital, what is assets, and what is liabilities. Assets means what is total holding of the business in the terms of fixed assets and current assets. Under fixed asset, further bifurcation is there: tangible and intangible. Capital means internal liability, means what proprietor has invested into the business, and what liabilities are, liability means external liabilities are referred to as liability. Under dual aspect, we have studied that each and every transaction is going to have two impact in the books of account. One account is going to be debited and another account is going to be credited. So in this accounting equation, we will see this only practically, that if any transaction take place, what happens to these three things which are known as assets, capital and liabilities. We will see the impact of each one under the accounting equation. So let's start our accounting equation with certain transactions. So today's first transaction is started business with cash. So I'll tell you how to deal with it. Started business with cash. If this transaction is given to you, with cash, let's say rupees 50,000. So here what is happening and how are we going to deal it under the accounting equation? One aspect of this transaction says that the cash is coming under the business. So cash is coming means cash will be added. And another aspect of this transaction says that we have generated an internal liability towards the owner. So capital is also going to be added. That is why when we write this accounting equation, which is assets is equal to capital plus liability, we are going to add something under the liabilities and we are also going to add something under the capital. Let's say assets are being added by 50,000 rupees and capital is also increased by 50,000 rupees. As far as the liabilities are concerned, nothing is taking change over here. Nothing is taking place over here. So accounting equation is tallying. One more aspect of this thing, that accounting equation should tally all the time. Whatever transaction is taking place, the result of it should be accounting equation should match. Now in the coming transactions, we will also see that assets are further classified, so do the liabilities. Like over here, in place of assets writing plainly, I can write cash because the cash is coming in the business. I hope students you are getting it. Now let's see one more transaction of understanding this. Let's say we purchase goods for cash, purchased goods for cash. Rupees 5,000. So when you purchase goods for cash, what is happening? On one hand, your cash is going and on another hand, inventory is coming. So you are going to write these both transactions on the asset side. So here I am going to write cash plus asset. Inventory means inventory or stock, whatever you want to call, you can call it. On the one hand, I am adding 5,000 rupees in cash and I am deducting 5,000 rupees from, I have done reverse, I am adding 5,000 rupees in inventory and I am deducting 5,000 rupees from cash because I have to pay the cash and I have to receive the inventory. So it is 0 and here also 0 because we haven't added anything. So accounting equation is tallying. All the time your accounting equation should tally. So by now what we have understood that accounting equation will result in increase of the liability or increase of the asset, or it will decrease the asset. One asset will be decreased, one asset is going to be increased, something like that. Means it will have impact at two places. That two places can be asset itself, that two places can be capital and liability, or in the liability itself, or asset liability. Any kind of permutation combination is possible. So each transaction when you look at, you have to think of the two aspects of it and then solve it. Let's do one more transaction. This is sold goods for cash rupees 50,000. If you are selling goods for cash, think what is happening under your assets and liabilities. If you are selling goods in cash, obviously you are going to receive cash. So your cash is getting added by 50,000 rupees. Whereas if you are selling the goods, it means what? Your liability, your stock is reducing. So a stock is going to be reduced by 50,000 rupees because you have sold the stock. Now here nothing is coming. So what is happened? First 50,000 rupees is added in cash and now 50,000 rupees is deducted from cash. So 0 is equal to 0. This is tallying. So accounting equation tallied once again. So students, what we have understood by doing these transactions, that one side of the asset or liability is increasing and another side is decreasing. This way all the transactions are going to have impact. Let us do two more transactions for today. Number 1, we will do sale of goods for credit. Sale of goods for credit rupees 10,000. So here again you have assets is equal to capital plus liabilities. Here under assets you have cash. Now this time you don't have, cash I will not write because now cash is coming. You have sold goods for credit. So you are going to write stock and debtors. Now which liability is going to be created over here, which asset is going to be created over here is your debtors, or which is also known as trade receivables. So I will write stock, or you can write inventory also, and debtors. You are selling goods on the credit basis. That is why it is generated. Here it is going to be capital only and liability. So I am repeating once again, capital plus liability. Okay, here under stock I am going to deduct 10,000 rupees because my stock of 10,000 is gone, and I am going to add 10,000 rupees in my debtors because in future I will be receiving 10,000 from debtors. Again 0 is equal to 0. My accounting equation is tallying. This is tallying once again. So every time when we write a transaction, we have to make sure that an equal amount is, coming for assets and capital and liability. Means total of both the sides should be coming equal. Now let's understand one more. For example, we have purchased goods for credit and the amount is rupees 5,000. Now this time what is happening, we are getting the impact of it both the side. We have on one hand asset increasing and another hand we are increasing the liability. As far as asset is concerned, this is going to be inventory which is going to increase. No cash is going or coming in. Capital is not getting affected. It will remain capital only. But under liabilities we are generating creditors. Why? Because we are not paying to our supplier right now. We will be paying them in future. So we have generated creditors. So my 5,000 is going to be added over here. Capital, nothing changed. So I'll write 0 plus 5,000. So my accounting equation is again tallying with 5,000 plus 5,000. So this is accounting equation, students. I hope you understood. We will be doing lot more transactions in the coming classes. Till then, revise this much and understand this concept very properly. If you have not yet subscribed the channel, don't forget to subscribe the channel. We will be meeting again with completing this chapter, and in the coming days, you will be seeing the general entries videos also with me. Bye. Have a great day.